What's up, everybody? Welcome back to Trading Wars. We're here for yet another day on the battlefield. I'm going to be breaking down some interesting findings that I did on my back test for 2020 recently. And if you're ready, let's step into the war zone. All right, guys. So I went through all of 2020, every day, trading day on SPY using a 5-minute chart. And I found some interesting conclusions that can greatly increase profitability. And it all comes down to timing of your entries in the market. So there's two specific timing types that I want to go over today. And the first one is inside bars, and the second one is looking at line limit buys, which algos use. So with these two strategies, you can greatly reduce your risk as well as increase your risk to reward. And at the end of the day, be more profitable, as well as certain trades that don't usually win because you're not getting the required move. Because you may be in a blind order or with a tighter stop loss, you're actually able to turn those trades around and make them winners. So let's get right into it. Let's look firstly at inside bars. So when we are trying to enter into the market, we have to time it. Personally, I wait for the high of the entry candle or low of that entry candle to break before entering a trade. Because what that means is there's momentum pushing that trade. And I like to be on the side of momentum because usually that increases your win rate. And if, for example, we use Friday, we can look at the different trading opportunities and talk about psychology and why certain types of orders are better than others. So let's look at Friday. So this is Friday, July 24th. So normally, if we wanted to buy in this market, let's say we wanted to buy this reversal here. Normally what people would do was put a stop loss, an entry above the high of this candle with a stop loss below the low of this candle, because that is the low of the day at the current time. However, if you see at the very top of the day, so the very, very high of the day, the maximum reward we could have gotten was about 1.47 R. What if we instead had our stop loss below this inside bar? Now all of a sudden, we can make a 2R risk to reward versus a 1.5. And if we take this habit and do this consistently throughout our trades, we can make significantly more reward. So how it works is essentially what we're doing is when we identify an area where we want to go long or short, if there is an inside bar, we can risk off of this inside bar instead of risking off of the bigger candle. And I took a sample of 150 trades, and only in 2 trades out of that 150, so that's less than 1%, did having your stop loss below the wider range bar actually saved you in this trade and allowed you to make the winner. So we can conclude that if we have an inside bar, especially early in the morning, we can risk off of this bar and have a greater risk to reward. Okay? But it has to be an inside bar in the morning time. And those that are familiar with Trading Wars, we trade the morning session and we are done pretty much by 11:30. So everything that I do, everything that I test is focused on the morning session because the morning session has the higher probability. Why? Because it has the greatest volume. Okay, and as traders, we want to be trading with volume. We don't want to be a part of the lunchtime where people are not trading and then we have all this choppiness. We want clean moves in the market. And the other thing, which may seem a little bit dangerous at first, but I've done the due diligence for you guys, it's purchasing at line limit orders. Okay. So let's look at this move here on Friday. So I've been talking a lot about algos, a lot about Fibonacci. Whenever we have an impulsive move in one direction, so you can clearly see here, we had an impulsive move up. It broke the high of the day at the time. We can look for these Fibonacci's to be areas of pullbacks, areas of support, okay? And when we see the market react at these levels, you see we have a nice doji candle between the 50 and 618. We can take an entry above the high with a stop loss below the low and look for profits. So in this case, we had about a 1.5 risk to reward. But based on my testing, I was able to find that instead of waiting for the candle, what if we front ran this order and had a blind order at the 618 with a stop loss right below the 786? And this is all comes from the testing that I've done, so I know 786 is a good level. So let's say we had a stop loss right below 786, right below the low of this candle. Now, all of a sudden, that same trade is a 3-to-1 risk to reward. So you see how that can greatly, greatly increase your profits. And now, if we're getting a 3-to-1 risk to reward versus a 1.5 risk to reward, we only need to win half of the time in order to make profits. So if we needed a 50% win rate before to make money, now we only need a 25 to 30% win rate to make money with 3-to-1 risk to reward. So the inside bars and the blind limit buys have greatly, greatly, greatly increased my risk to reward based on all of my testing for 2020. And that's what I'm going to be applying going forward. And I just want to look at one more example just to drive the point home before we finish the video. So let's keep going. Let's look at this day. So this is July 20. Okay. So here's the open, 9:30, crash down. And then if you notice, this candle, this was the low of the day, with this, the second candle of the day. However, we had multiple inside candles. We had 1, 2, 3, 4 inside candles. So if we wanted to play long in this direction, what we could do is instead of bracketing any one of these entry candles with a stop loss below the low of the day, we could bracket the candle below the inside bar. And now instead of making 2.5 R, we could be making 3.7 R, which is significantly more. So these inside bars are very, very important. And like I said, I enter when the high of the inside bar breaks, okay, the high. So the way you do that is you put a buy stop limit and you put the high of this candle, so 321.25. So you have buy stop limit 321.25 by 321.25. And what that means is it will not trigger you until the high breaks, and then you will get filled. And then I always have my opposing bracket for the stop loss, and then targets if I'm aggressive. So I hope that makes some sense, guys. That was it took me a few hours to go through all that testing. But to summarize again, we don't need to risk off the low of the day or the high of the day when we're taking trades. If we have inside bars, we can simply bracket those inside bars. They are very, very, very reliable because a lot of traders are trading them, especially in the morning session. And for pullback trades, when we have an impulsive leg, it's actually a lot more profitable to front run at the 618 with your blind orders and having your stop loss below 786. And that might seem a little bit scary, but I guarantee you, if you go and do your homework and your back test on stocks that have high volume, you'll see that these algos are always buying at these levels because their risk to reward is so awesome that they only need to win the trade maybe 30% of the time if you have a 3-to-1 risk to reward. So I really hope that adds some value to your trading and that you guys can start implementing this, and let me know how it goes and let me know if you have any questions. But back testing is something that every trader should be doing because it gives you chart time, it gives you confidence when you enter the market. It's just like if you're playing basketball, if you're playing soccer, baseball, you need reps. Okay, we're athletes, even though we're not physically doing something, we are doing a sport in a sense. So the more reps you have, the better. So I hope you found some value out of this video and enjoy the rest of your weekend. Thank you very much.